Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical structure level. In fact, this area already back here in 2020 was acting as very strong monthly supply and resistance. Again, here it was tested and respected as supply and resistance. And at the moment, the market is testing this exact same level from which there is a possibility of bearish price action being developed away from the zone. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, things get a lot more clear. In fact, from a pattern standpoint, starting from here, we can see how we had the start of a very strong impulse, followed then by the creation of this ascending flag. Now, if you have a situation like this, where essentially you have an ascending channel after a very strong impulse, what this is actually showing, and by using these trend lines, I can show you more clearly, what this is showing is a deceleration of the market and essentially an exhaustion pattern after which bearish price action could be created. In fact, if you look at the psychology behind this pattern, you have the start of a very strong move to the upside where clearly during this move, buyers are in control. Then after that, every time that the market creates a new higher high, new sellers enter into the market and push it lower. This shows how strong that monthly supply and resistance area is, from which more bearish price action definitely seems possible. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, this is where things get very interesting. Now, first of all, I did speak about gold quite a few times in the past. I spoke about gold when the market was here. I explained all the reasons for which from here we could expect this rejection to the upside. Then, after this impulse here and correction from here, I made another breakdown explaining all the reasons for which we could expect the creation of a new daily higher high. And after this impulse from here, I explained why we wanted to see first the correction, then the higher high, and then a potential move lower. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. However, at the moment, what do we have and where we could be looking for the next potential move? Now, the first thing to keep in mind is that the daily structure is now broken to the downside. In fact, if we look closely, we can see how this was the level that was acting as previous daily resistance here, again here, and again here, which after the market broke it to the upside, shifted from being resistance to being support and acted as support also here. However, now that the market has broken below that zone, the daily structure is now turned bearish, and this previous support is now turned resistance. So we had a clear impulse to the downside, which made this market shift from a daily bullish market to a daily bearish market, because essentially we went from creating higher highs and higher lows to now creating lower lows and potentially lower highs. So all this area here is very strong resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for gold, what we can see here is that now net positions are getting decreased. With the last report, we went from having 195k net positions down to 179k net positions, with 4,700 shorts added with the last report from an institutional perspective on gold and 11,200 longs getting closed. So institutions are now adding shorts and closing longs, making gold weaker. Now, if you have an impulse in the market and you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse leg. And if we do that, what we can see is that all this area is very strong resistance. This is the area in between the 0.3 to 50% and 0.618 golden ratio of the Fibonacci taken on this daily impulse. And if we extend this level to the left, as I have already done, this is exactly the zone from which all this rejection to the upside was created, meaning that this is also previous daily support turned resistance. Now, this creates confluence of resistance at this area that we could expect this market to potentially reject to the downside. So how we could be approaching this potential move lower. Now, the first thing to keep in mind is that institutions are already adding shorts and closing longs. So if we will have a deeper test of this area, there is definitely the possibility of more institutional shorting. So the way in which we could be approaching this is, as usual, being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to a bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to only $97. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you joined the mentorship program from your student dashboard, you can get a full refund credited back into your trading account. And if you scroll over here, you will see that at the moment there is still time to join before the offer expires and price goes back to normal. And directly from here, this is the button from which you can join in order to gain automatically access to the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.